Hello traders, so on this episode I'm about to run a quick technical breakdown of how I was able to take a $120 account to over $2,000 account on a single trade. I will run you through the technical approach and the risk management approach of how I was able to do that with utmost precision. And if this is the first time you're coming across my video, do well to like and subscribe, follow my account. If you've got questions, drop the questions and I'm going to make out time to give you your responses. If you are a developing trader and you're looking for a community where you'll get properly nurtured, click the link in our bio to join our free Telegram community where I drop free market insights and technical approaches every day. Let's head straight to the chat. Quick technical breakdown of how I was able to capitalize on this very trade. You can see this very impulsive movement. You can see this crazy dump that took place on BTC. How I was able to catch it with my team, my boys, and I was even able to flip one of my prospect accounts from $121 to over $2,000. I was at the gym. Obviously, I saw my fractal. I saw what I was waiting for, which is having a reaction around my favorite level and price, opening price model. So what actually happened here from a technical standpoint was very, very basic. Let's take a look at this very structural shift to the downside here. You can see that is one. So we had a valid structural shift to the downside. And before we had that structural shift to the downside, we swept some level of liquidity. You can see this very high got taken out. Series of highs got taken out. You can see this high, this high, this high. These were all liquidities that were being built up in the market, and dozens and dozens and dozens of traders placed their stop losses above those levels, expecting that, okay, price could probably not just take it out and continue dumping. But because they had low or poor knowledge about liquidity, they ended up being taken out, which is still normal in the business. I mean, if it happens even to the best of us. So after we had that displacement to the upside that took out those liquidities, we started seeing displacement to the downside, which led to structural shifts at this level. After we had the structural shifts to the downside, what has happened? We started seeing retracements into the range that led to the structural shift to the downside. You understand? This retracement that took place here, which also built up liquidity as well. Built up liquidity and, manipulated around this level, around the range that, just created the liquidity. Probably most of traders must have been chasing the ups and downs that were going on here. But if you know what you're doing, you should stay calm, relax, chill, and be a professional. You don't jump in and out in the market like a newbie, if you feel me. So I looked up my Fibonacci tool. I looked for 50%. So as we have price broke above this very last high that got created, that was served as liquidity, and then traded below and took out this lower time frame. You see this very structure here. That was when I knew, okay, I know what you're up to. And it's very, very straight to the point. Take a look at this. The structure has been balanced. Trial price has traded above the equilibrium of the recently created range. So this was a balanced range. The fact it was a balanced range wasn't enough for me to, engage. But after we had this structural shift to the downside here, again, I was like, okay. Let's see. I mapped it out, starting with my opening price as usual, which is my favorite model of entry. You can see broke below the opening price, retested it, and just inside there, we had a decent order block. So all these were confluences that I had to put into consideration that gave me confidence on my MetaTrader. So marked it out. I dropped it to my boys in the Signal group, and they all made crazy money. You can see what happened. Immediately we tapped into my opening price. You can see the impulsive drop to the downside immediately. After that, the price was targeted my TP1. This was where I gave them TP1. After the TP1, price retraced back, mitigated this level in price, you can see. And I actually got an entry there. I got a perfect entry opportunity at this level. And that's what I did. If you really want to go far in this industry, you need to, give into exposing yourself to danger, exposing yourself to the risk involved in this business. Most importantly, if you know what you are doing. I am playing around in this market the way I'm doing because I've been here for years. You can see this drop was so crazy. And as a matter of fact, it dropped into a level of price I marked out few days ago. And although I deleted the limit order I had in this opening price since because I think we had market traded down here. The previous time I planned on taking an entry from here, it traded down, but failed to trade into this opening price. So I was like, man, fuck it. Came back today, tapped into it, and you can see we've been seeing displacement to the upside. And yeah, during this London session, let me give you a quick breakdown of how I was able to catch this very one as well. It's a very, very straight to the point trade. You can see we had price moving impulsively to the upside after tapping into this opening price. And that is other block I got from there. We saw price playing around the level without tapping into it. I consider that to be liquidity. Okay, initially I even thought that, okay, probably I've missed out on it, but no. After price got done playing around, broke structure to the upside again, as you can see. After price broke structure to the upside, I got my entry there, and boom, that is a decent 1:4. I mean, I've closed out. I think I closed out before I started this video, somewhere around here. And you too can replicate it. Just put in the work required. I mean, submit to time. If you really put in the work, trust me, you're gonna get the results.